Ladies and gentlemen, after one of the biggest 7-day drops in the market in literally years, we have just followed it up with one of the most bullish daily candle closes in literally years. I mean, you can't make this stuff up. The market has been a wild ride over the past couple of weeks specifically. And now the question is, when will Bitcoin and cryptocurrency be safe again? Because unfortunately, the veil of uncertainty has very well shrouded crypto for the last couple of weeks. Right, going down to 49K was in no one's expectations. And I'll tell you this right now, not a single person in this market who knows what they're talking about at least expected to go down to 49K and then reverse to the upside and end up at 62,000 a few days later. No one expected that, just like no one expected the 74K top to be such a major level. I mean, these are things that were just purely unexpected due to the uncertainty triggered initially by the ETFs. I warned about this. We were going to be entering a unique market environment. I've always said that this will be a market environment. This will be a cycle where we need to be more reactive rather than predictive. I've tried my best to do that. We've navigated this situation fairly well. This period of time, however, in the last few days, in my opinion, has been impossible to navigate. And we have ended up with a sell on Bitcoin at 54,000 based on this ascending support line, which it turns out actually was a very good support line to react to because the daily candle closed on top of it, maintaining it. But unfortunately, we sold on the breakdown. We did wick downwards to 49K and avoid that drop, 47K. However, we did close back above that line. We did bounce from that line. So our invalidation line, we were right to have it as an invalidation line. The problem is we actually held it on the daily candle. And here we were on the wick selling. So we got chopped out, realistically. I mean, that's a simple way to put it. We got chopped out of the market, or at least I did. And look, I'm going to put it this way. I'm still uncertain of this market environment. I don't think this is a safe place to buy still. But in this video, I will directly give you where I think it is a good place to buy. I want to remind you guys, trying to keep, I obviously just literally stated in the introduction that we got chopped out of the market because our invalidation line didn't actually end up properly breaking down. But I will remind you guys that hindsight is 2020. And I'll tell you right now, when we were down here at 49,000, right, 10% below the breakdown line, 15% below the line on altcoins and Ethereum, no one was telling me that I got chopped out, right? Everyone was telling me that was a good move, right? So let's not be too quick to judge here and act like you're a market expert when no one expected this, right? This is the biggest drop we've seen in years. And also the macro economy shifted as a whole, right? We have unemployment ready to spike, which potentially could trigger a recession. This is by no means over, right? This market very well could still go down. This very well could be a dead cat bounce, which is why in this video, I'm giving you my direct kind of points where I would deem the market to be a reasonably good position again. At the moment, I still don't think it's quite there, but we're going to look into it today. So guys, thank you for watching in advance. Let's get into a couple of things before we get into it. The 5,500 USDT reward for signing up using my referral link on the Bitcoin exchange, the 4,000 USDT reward for signing up using my referral link on BingX, 15% trading fee discounts on either exchange here. Right, so if you sign up with my link, you get a 15% trading fee discount guaranteed. The reward is not guaranteed, the discount is guaranteed. And these exchanges are global non-KYC, so you can sign up from anywhere in the world. There's no restrictions. And they also have never been hacked before, and they're also very low in trading fees to begin with. So use my links down below, get a potential 5,000 USDT reward on Bitcoin and 4,000 on BingX, and get a guaranteed 15% trading fee discount. You're also helping out the channel a lot. This helps out. These videos are free on YouTube, so this is how you can give back to the community, basically. Guys, thank you for watching that. Let's get back into the content. On this drop, although it was brutal, and although there are still fears, there are very well still fears on traditional markets and the macro economy, like unemployment rounding out, which generally happens before a spike in unemployment, which generally leads to a recession. 8 times out of 11, it's led to a recession. These are threats, and although S&P 500 is still at resistance at this point, it still has a breakdown on the weekly chart RSI. There are threats that are developing here, but the base case has always been that we see the Federal Reserve print their way out of the problem. That's always been the base case. That does seem like the likely scenario still. That's never not been the likely scenario. So I do lean towards that. I've always lent bullish. But the problem is you can't just hold forever, right, and have no sell points. Now, the sell point I did have was this line right here. It was a 5-year, in fact, 6-year ascending support line that divides, bearish market structures. Won't quite say bull market and bear market, but let's just say bearish market structures from bullish market structures over and over again. This line broke to the downside at 54,000. That was our sell point. I stuck by that. That was always our sell point throughout the entirety of this range, or throughout the latter part of this range. I stuck by that. We dropped downwards. We sold at 54,000, dropped downwards to 49,000. So technically avoided a massive drop there, avoided another 9% on Bitcoin, another like 15, 14% on Ethereum, 20% on many altcoins. But the problem is, on that same daily candle where we dropped downwards, we bounced off of a very major support zone at 47 to 49K, which you can see in a green rectangle here. We also formed a new ascending support line in yellow, as you can see, which stems backwards from this period in October, which is just after kind of the resistance breakout. And we bounced very, very strongly. We also managed to maintain this large descending broadening wedge structure in yellow, right? Although there is a fake out from that wedge structure, if you zoom in, let's just go ahead and do it quickly on the, let's just say the hourly chart. Let's go see what happened. You can see that even on the hourly chart, this at 15 minute would probably be a better way to look at it. Actually, let's just do that quickly. This wedge was very, very briefly dropped below. Like it was a very brief drop, and it clearly acted as resistance and support during this drop, right? And it was a double bottom formation underneath the wedge, went back upwards. I wouldn't really consider that a valid breakdown. I'm not necessarily too confident in the wedge structure itself, because now we have, let me go ahead and show you. Now we have a fake out from the bottom of it and a bit of an inconsistent resistance line. But overall, I think it is true that that wedge is what the market structure is right now. I think that's validated by the fact that the total 3, which is the altcoin market, is in a similar descending wedge formation. Yeah, and I think we are in a wedge formation here. And therefore, if the entire structure here, right, has been encompassed within this descending wedge formation, it seems logical that the breakout of the wedge formation will be the actual trigger point for a move back to the upside. That seems like the logical scenario. We've seen wedges like this before. If you go back, let's go ahead and take a look here. You go back to the COVID drop, right? Even from 2019, you draw in a wedge, something similar. I'm not going to get it exactly right, but it's something like this off memory. There was a wedge there. Maybe it was drawn like this. I don't know exactly how it was drawn, but there is a descending wedge here with a fake out at the low, just like what we've seen now. And eventually did lead to a breakout of some sort. Again, haven't drawn it correctly, but it's something like that. And eventually it led to a swing back to the upside, and that led to a bull market, right? So maybe that's something like what we're seeing right now. Maybe the drop we saw over the last week was equivalent to the COVID drop, which was a deviation below the bottom of the wedge. These are possible scenarios. These are scenarios that are hard to validate. As I said right now, I still don't think we have confirmation. I still think we're in an uncertain market environment, especially as we come up and start testing these macro indicators. Bull market support band, Gaussian channel center line on a daily chart, even Ichimoku cloud on a daily chart. All these levels are being tested right now as we speak. And although a lot of these levels have lost a lot of validity because they've been very, very, precise in the past, and now that we've dropped below them, we've seen fake outs above them, below them multiple times over the last month. Yeah, they've lost a lot of validity. Fact of the matter is we still are testing them to the downside, and this will be a test of their validity, right? And they're very clearly acting as resistance still right now. So they might not be amazing macro indicators anymore for long-term price action, but they still are resistance zones. So yeah, we are testing those right now. I don't think right now is the time to buy, or at least I don't think right now is the time to buy in large amounts. What I will say is that, as I said before, we still have these threats developing. There still is a threat of recession here. We can very well go back down. There's absolutely no confirmation at this point of upside price action. I don't necessarily trust this level, this 60K to 61K level, at all anymore. I think we've seen too many fake outs. We saw a fake out here. This is our third fake out if we go back upwards. So this level is, although it's a very important support zone, it's not really a macro breaker anymore. I don't consider this really to be the bottom of the range anymore with 3 separate deviations. I don't know how you could. It is a macro level. It's an important level, but it's not something that I would be looking to buy after a breakout above. And this is what I mentioned in yesterday's video. Now, what would I be looking at to buy above? Well, I want to make something very clear. Ethereum, I'm not looking to buy at all right now because it's at its stagnant macro resistance level. Ethereum is very clearly at resistance with this red rectangle that it's been acting as resistance from since January. Ethereum, in my opinion, needs to break this yellow descending resistance line and this red zone, and then we can potentially start buying Ethereum. And then at that point, you might see Bitcoin dominance start to reverse. On the total 3, and so altcoins in general, I think we're not really in a buying position either. Total 3 is still in the descending wedge formation. It's still got its bull market support band, which on the total 3 has not acted badly. It's been a very precise macro indicator on the total 3. Still reinforcing the top of that wedge, that channel, I should say. And so for the total 3, for breakout confirmation, you need to be seeing that channel break as well as that bull market support band break, and potentially even the red line at 662 billion break. That would probably be the full confirmation that you can start getting back into altcoins. And until that point, on Ethereum and on altcoins, I don't believe we will see Bitcoin dominance reverse. I believe Bitcoin dominance will maintain in an upwards trend until that point. As for Bitcoin, I can make a case at this point. I think I can make a case at this point for very light buying. But I don't think any significant buying really should be taking place below 64,000 at a minimum, and probably even a little bit higher than that, because that's where these indicators are. These bull market support band, Gaussian channel, etc. They're all at 64,000. I think we just need to get above that level at a minimum. And then for absolute confirmation on Bitcoin, right? There's going to be no macro breakout confirmation, in my opinion, until we break this descending wedge formation, which I do see as the valid structure at this point. So those are my buying kind of locations. Now I want to quickly take a moment, clarify a few things here. I sold my Bitcoin at 54,000. I'm very open about that. I'm very honest about that. I think that was the right move. I do. Now, you can sit here and say that upon the daily candle close on that line, which was my invalidation line, I should have bought back, right? Perhaps you can make a case for that, but I will, very clearly put to you here that hindsight, okay, often makes things seem clearer than they are. They actually were, I should say. I want to really nail this down, right? No one in this market had a justifiable reason to buy during that drop. Not a single person in this market had a justifiable charting reason to buy during that drop. Saying buy the dip doesn't mean you know what you're talking about, right? I said this from the very day it occurred. I said the market is probably going to go back up again, right? And when it does, people are going to praise these people who brainlessly said buy the dip with no evidence and no data, right? But at the end of the day, you have to trust your thought process rather than your actual thought. Right? It's thought process that matters. It's the way you structure your opinions that matter. It's the data you present as a backing for your opinions that matter, not the actual opinion itself that matters. So if you're saying buy the dip, buy the dip, buy the dip, buy the dip, when the Federal Reserve did not cut interest rates, even though the bond yields were dropping, when unemployment came in bad and is rounding out looking like it's going to spike to the upside, cause a recession, when the Samheim recession rule indicator is still in a bearish recession trigger. I mean, that does not make you a smart analyst. That just makes you a gambler, quite simply. And I still think to this day, right, nothing's changed here as we go up to 61K. I still think there is a shroud of uncertainty in this market. There's a shroud of mystery. The macro structures which we previously had, right, the 5-step pattern on the altcoin market that indicated an altcoin season starting on this peak right here did not occur. The bull market support band, all these indicators, they broke to the downside. This range has been in place for 6 months almost now. 6 months. Much longer than any cyclical consolidation. We broke all-time highs before the halving. All of these things happened. ETFs came out. It changed the market structure massively. I mean, this, unfortunately, is a cycle in which, as I've pointed towards many times over the past 6, 7, 8 months since ETFs, right? I've said it over and over again. Unfortunately, this is a market cycle where we need to be reactive rather than predictive. I don't feel as though it is logical for me to sit here and predict things, right? I'm not going to predict a bear market. I'm not going to predict the bull market. It's not logical. We need to react to the lines of which we see to be important. And although our reaction to this line here, I mean, it worked to an extent. We avoided a bigger drop. But although, we are above that line now, I mean, the fact of the matter is, the fact that that line saw the daily candle close on top of it for support and ultimately held means that the line we were looking at, the level we were looking at, was important. It was a level to react to. Unfortunately, we just got unlucky there. But I tell you right now, when we were down here at 47,000, 10% below that line, 15% down on Ethereum, 20% down on altcoins, no one was sitting here saying that I made the wrong decision to sell there. It's only as we sit back here at 61K after a ridiculously volatile week in the market when no one knew what was going on in a shroud of uncertainty, it's only as we sit here do people say, oh, Wolf, you panic sold. Well, you can't really panic sell below a level you held as an invalidation zone for over 5 months. Right? It's not really a panic sell. So I don't regret anything I've done in this move. What I do know is that the market is still shrouded in uncertainty. I don't think this is a place where you should be buying in any massive way. But I think that, again, like I've said over and over again, like I've never changed my mind about, the likely scenario to me does seem like a scenario of Federal Reserve printing a bunch of money to get themselves out of this problem. That does seem like the likely scenario. It's just the events over the last month have kind of lent away from that and given credit to the other case, which is the recession scenario, including these indicators that are triggering unemployment right now. I still think the fact of the matter is no one really knows what's happening with macro. And for that reason, I'm still not really too confident in any particular argument, right? I'm not really too confident in the bull case right now. I'm not really too confident in the bear case either. I'm on the fence. I'm confidently on the fence here. I don't feel a need to buy and rush into the market when there's no sufficient data. Because at this point in time, if I bought here, for example, and this is just a hypothetical scenario, if we bought here at 61K, I don't know where my invalidation zone for that buy would be. I don't see the 60 to 61K level as important anymore, right? We faked out below it 3 separate times, seeing massive gargantuan drops below it every single time we've gone below it, okay? Especially the last 2 times, huge drops on altcoins being decimated, right? If I bought here, where would my invalidation be, right? Where would my sell point be? Well, it would have to be back down here, right? Below 49,000 or 47,000 or below this line again, meaning that our invalidation point for a buy here would be another 10% down, which would be 15% down on Ethereum, 20% down on altcoins. You can't just keep buying brainlessly and hoping for the best, I should say. They look at this drop and they think, oh, that was a perfect place to buy. I assure you, the market is not that simple, right? There are nuances here, nuances that you need to understand in order to make money in this market. You can't buy every dip because sometimes the dip keeps dipping. Look at bear markets. They happen, right? They occur. Buy the dip there. Oh no, it goes down to another 60, 70%. Your altcoins die forever. You know, you got to be careful with this kind of thing. You've got to have invalidation points, right? And it's as simple as that, really. So I'll end the video there. I think I've been rambling for a bit too long here, but I think I've given you clear kind of points in which I would be confident in the market again, or at least semi-confident in the market again. Unfortunately, I don't think we will be able to maintain, to ever achieve a massive degree of confidence again. I think our structures have been damaged permanently here. That's the simple truth. But there are points in which we will be able to buy, of course, and I think I've listed them in this video. So guys, thank you for watching. I hope you enjoyed the video. Go ahead and check out our exchanges. I think I might have mentioned them before. Bitunix, okay? Look at the screen right here. Sign up to win $5,500 US. It says there right on the screen. If you sign up with my referral link down below, $5,500 US. Bing X is 4,000. They're both global non-KYC. They've both never been hacked before. And with my referral links, you get those rewards and also a guaranteed 15% trading fee discount. So the reward itself is not guaranteed, but the 15% trading fee discount for life on either of these exchanges is guaranteed. So check it out. We've also got the Academy here, guys. This is a course that teaches people how to trade. It's on sale right now for a limited time. So get in there if you're interested. It's a university style course. Read up about it on the website and throw us an email. Our email address is on the website as well. Check it out if you want to learn how to trade. And then finally, our VIP group on Telegram. We trade altcoins 4 times a week. We've got 115 VIP members in there. We've got a PDF of all of the historical trading results. You can check that out as well. If you want to trade altcoins with me on Telegram, that's where you can do it, right? Thank you guys for watching. I hope you enjoyed, and I'll catch you in the next video. Cheers.